Hi, my name is Kevin Garrett with CBiz Benefits and Insurance Services. I'm the business unit president for Southern California, and I'm here to talk about saving money using alternative funding strategies as well as captive insurance companies. The main difference between a captive insurance company and a typical insurance company is a captive company is owned by a group of like employers in size or industry. So you can band together, form your own insurance carrier using various funding methods, and at the end of a given year, if you perform well, you share in the profits. You can spread the risk across those employers, and so it's much like a self-funded arrangement where you involve an administrator and a reinsurer, and you can predict what your minimum and maximum costs will be. And as long as you don't exceed those budgets, you can share that money amongst the group, or you can move it on to the next year and allocate it towards future costs. There's always risk. I mean, that's what insurance is. It's management of risk. And so the captive environment is no different. If you're in a given group of 10 or 20 or 30 employers, if one or more of those aren't running well, it could minimize or eliminate the possibility for you to achieve some savings or retain dollars that you might apply to future costs. And so it's important to manage who comes into your group and how often you review who's in the group and how they're performing. The other things that can change are the way these benefits are taxed. The Affordable Care Act has certain taxes that apply to all insurance plans, although in a captive arrangement, those taxes are greatly reduced. There's no such thing as being too small to consider an alternative funded arrangement. A lot of consultants will tell you you need to have 500 or 1,000 employees, and actually in the captive space, as well as the alternative funding or self-funded space, more and more carriers are creating programs where employers as small as 30, 40, 50 employees can take part in these programs and have a great chance to win and achieve some gains or savings that they can move on to future years. And that becomes more important as the Affordable Care Act continues to put pressure on pricing and how plans are designed. Before you predetermine it's not right for you, have your consultant or broker take a look at it. I think we've had a lot of great fits for employers that are very small, and they've been very successful for a number of years. And alternative funding methods and captive arrangements could be a great alternative for your business and how you purchase your insurance for your employees and your employee benefits. If you have greater interest, contact us at CBiz, contact your local CBiz consultant where you may be, and we'd be happy to talk to you in greater detail. We're always here to help. We'd love to answer your questions.